Peace. How's it going, Patrick? Conservative Rap. And in this video, we're going to talk a little bit about the trade deficit. There's a war between the Patriot Agenda and the World Economic Forum, the central bank system. Let's take a look at the trade deficit news from the last refuge. I'm going to post this article. And U.S. trade deficit drops 40% in latest Commerce Department report. As we review this latest data on trade, remember any drop in trade deficit has two big picture functions. First, lower trade deficits generally mean accompanying GDP release will be stronger than anticipated because imported products are a deduction from the valuation of all goods and services created in the U.S. economy. Lower imports mean less is deducted. Secondly, and perhaps more importantly, a drop in the trade deficit created by diminished imports means more wealth remains inside the USA. We're not sending money overseas to import foreign goods at the same rate, and that money stays inside the US economy. More wealth inside the US provides the fuel for expanded domestic growth, more investment gains in US manufacturing and US industry, and the ability to pay higher USA wages. The Commerce Department is reporting today that the U.S. trade deficit for October 2025 dropped to the smallest amount in 16 years. A significant amount of the deficit drop was because a high value of physical precious metals, gold, silver, was exported, simultaneous with big offshore pharmaceutical companies dropping the prices of imported products, policy and tariff pressure. This is from the Wall Street Journal. U.S. trade deficit shrank dramatically in October to its lowest level since 2009, the Commerce Department said, an unexpected twist in a year of volatile trade flows that have been buffeted by the Trump administration's steep tariffs. American imports fell to $331 billion in October, while exports increased to $302 billion. That yielded an October deficit of $29.4 billion, an imbalance nearly 40% smaller than September's. Some may question whether internal consumer demand has declined, causing the significant drop in imports. However, the U.S. productivity rate is still really high, very high, which generally means domestic consumer demand is still high and all units produced have a lower overall cost per unit. Economic analysts can get weedy, so a simple way to look at productivity is to think about the baking of bread in your kitchen. If we're going to bake 4 loaves of bread, it might take you 2 hours start to finish. However, if you were going to bake 8 loaves of bread, it would not take you twice as long because most of the tasks can be accomplished with simple increases in batch size and only minor increases in labor time. Your productivity measured in the last 4 loaves is higher. Economic productivity is measured much the same way within what's called a production probability equation. Additionally, if 2 hours of your time are worth $40, each of 4 loaves of bread costs $10 in labor, but if you make 8 loaves in the same amount of time, the labor cost is only $5 per loaf. Improved gains in efficiency and productivity, more bread needed, supports faster economic growth without generating higher inflation. No need to raise prices because your cost to make each loaf of bread decreases the more you make. Higher sales and lower per unit cost means more profit for the bread maker. No need to raise prices, and without inflation, there's no motive for the Fed to raise or maintain high interest rates. Increases in productivity generally means the economy is generating more stuff. The more stuff generated, the higher the value of all economic activity. This increases GDP growth. When we see higher productivity in direct alignment with GDP increases, the increased production indicates sustainable GDP growth. Additionally, when we look at the internal dynamics, we see big happenings inside the domestic economy. The data was delayed by the government shutdown, but in December, the Bureau of Economic Analysis released the third quarter 2025 GDP, showing a very strong 4.3% growth. The second quarter was also revised up to 3.8%. Real GDP increased at an annual rate of 4.3% in the third quarter of 2025, showing increases in consumer spending, increases in exports. Third quarter imports, which are a subtraction in the calculation of GDP, decreased, boosting to the overall GDP number. The strong GDP corresponds to today's report showing a shrinking trade deficit. And just as a separate note, this from E.J. Antoni on X. Atlanta Federal's Reserve's quarter 4 GDP forecast explodes to a red-hot 5.4%, with consumer spending and investment rocketing higher. Here's their estimate now. He goes on. Consumer spending, investment, and net exports all making big contributions while government growth is minimal. And again, you're going to see gold moving up, silver moving up, Bitcoin moving up. We're shrinking the government. We're firing people in the government while money is coming in from external sources. And he has ways around, Trump has ways around this tariff issue that's coming up, regardless of how the ruling goes. So more to be excited about. 2026 is going to be, I think, a boom very few of us are prepared for. But it's time to be optimistic. And yeah, feel free to let me know your thoughts. Again, Brian at ConservativeRap.com, and look forward to more content soon. Thanks and take care.